all about emerging markets, sub-Saharan Africa and Africa as a whole, starting to gain a lot of appetite from international investors. Just looking at these funds that are going to be launched, tell us the makeup of these funds and what are they really focused on, looking at the equity markets, asset allocation, so forth.
Okay, well, thank you very much for having me. We've launched two funds. We've launched a Pan-Africa and Sub-Saharan Africa fund. They're both UCITS registered, they're Luxembourg-based funds, and they will be sold to investors in most parts of the world. Both funds are equity funds, and they look to capitalize on the absolutely enormous opportunity of Africa, which we see as one of the most attractive destinations globally. We've been very thoughtful in launching these funds. We thought which are some of the best opportunities that we can make money for our clients long term. And to us, Africa is a complete no-brainer. It's incredibly cheap. It's decorrelated. The GDP growth is broad-based, and there is a very substantial political change. The trend of improvement in governance is established now, and the world focus is now gradually shifting to Africa. As you can see, media attention is picking up, and that's always helpful in driving foreign direct investment. The first fund, the Sub-Saharan Fund, will focus on the fastest growing part of Africa, which is the very heart of Africa. The asset allocation there, from a country basis, it will be initially biased to some of the larger countries like Nigeria and Kenya, and this is very natural in a first stage of market development. You really want to be where the large populations are, the large opportunities are, and if you look at what happened to BRIC investment, it's precisely the same paradigm. When you've got lots of people and you've got positive change and GDP per capita is growing, a lot of wonderful things can happen in a larger market, which really can't happen in smaller ones. But as time progresses, those large countries will become a pull to the smaller ones, and there'll be some fantastic opportunities in some of the smaller geographies. Saying that, the fund is also exposed to some of the smaller markets like Ghana, Mauritius, and some even more, so to speak, exotic destinations. The Pan-African Fund is looking to capitalize on the opportunity in the entire continent, including South Africa and also the northern bits of Africa. The biggest theme that we will be playing there is the increased integration amongst the African countries themselves, the increased trade flows, and the establishment of Africa as preeminent investment destination for some of the large BRIC countries. We know that China has been investing in Africa for some time, but now the other large BRIC countries like India, Brazil, increasingly even Russia are investing in Africa, and we want to be there as this takes place. We would also look to buy equities on exchanges that are not African, and yet again capitalize on the market opportunity. In that case, our clients will benefit just from the fact that those exchanges may be better regulated and more liquid. So we're very excited to be launching these two funds, the Sub-Saharan one and the Pan-African one. We think our clients will make substantial amount of money over the long term.
Plamen, are there specific industries and sectors that you are seeing opportunities in for these funds?
As I mentioned, the biggest opportunity that we see is in the African consumer. We've done very granular detail of GDP growth and its componentry and the future drivers. And a lot of people think that Africa growth is commodity-based. To us, this is simply not true. And it's very obvious that just a third of that growth is commodity-based. The majority of it is really the new large consumer force in the world, which of course now is poorer than other places in the world, but the assets that we are buying are appropriately priced. So when we drill into the sectoral breakdown of the fund, you will see that the consumer in Africa is well in excess of 50%. And let me stress this is quite unique, because one of the problems of investing in emerging markets is, while we all would like to invest in the consumer of emerging markets, that consumer is either underrepresented in the large indices or is exceptionally expensive. We know that consumer in the BRIC countries is on 20 times earnings or cash flows. Consumer staples in some country like India on 9 times lowest price to book. We don't have that problem in Africa. The consumer is priced in a very undemanding way, and we would like to be there.
Plamen,
the other opportunities that...
Yeah.
Yes.
If I could just interject there, you
Sure,
can tell me
ahead.
about those other opportunities as well. But just looking at, we mentioned asset allocation, you're talking about fantastic stock picks. When it comes to Africa, we've got liquidity issues when it comes to a lot of these stocks. Tell us in terms of the allocation when it comes to multinational companies that are operating in Africa, or are you going into these local companies? And if you are, we also have a big issue when it comes to reporting and, of course, various regulatory issues that play out in various countries. How do you manage those risks?
I mean, there are two questions here. Let me start from the second one. Of course, regulation and reporting are imperfect. But I've no doubt that as time progresses, as wealth in the region increases, and as more international investors try to access those opportunities, they will demand stronger regulation. And again, the imperfect regulation is in the price of the assets. If regulation was like in the developed world, like if it was like in the UK and the US, the share prices would not be trading at those levels. And we've seen a positive push towards regulation. The banking sector across the region has adopted IFRS accounts, investor relations, which were, investor relations in the different companies, they didn't exist a few years ago, but now a lot of companies are making a concerted push to establish investor relations departments, and some of them are even working with multinationals and with public relations firms just to improve disclosure. We're at the very beginning of the development of the market.